3, a buying climax occurs at the top of the range. Okay. Number 4, I'm talking about bars 4 and 6 now. Supply increases. We see port closes, volume picking up. So supply increases to the downside. And then we get, final piece to this is no demand after supply has come in. So look at the Wyckoff. This is my Wyckoff story. I'm up against resistance. I'm overbought. Climactic action. Climaxes turn the trend of the market. And they turn it from, generally it goes from trend to trading range. But in the intraday, we often see climax and then a new trend occur. So buying climaxes are really important. Supply increases and no demand comes in. That's how you tell a Wyckoff story. That's how you do it, right? And down here, just to kind of nail this down, I got a sideways trading range, a long sideways trading range, and a breakout, okay? And I'm breaking, I take out resistance. And then I take out resistance again because I push up higher, so resistance again. Now I come back and I'm holding on top of old support. There's no real strong supply in the market, although the standard volume suggests that. But the Weiss wave suggests that this is a selling climax and no strong volume. And then I get demand come in and push back up above old resistance. And so that's a buy. Again, a Wyckoff story. At number 7 on the Weiss wave has no demand. More story for the short. Right. That's exactly right. Yeah, there's no demand in here. I didn't highlight that. But yes, if you were long at the start of the trading day, wouldn't you be out of the market at bar C? No. Why would I be? It's coming into support, climaxing into support. I'd be concerned about it to begin with, but I would say, oh, it's on top of support. I'm going to, give it another bar, I guess. But no, I wouldn't be upset at that. And why do you use number 1 in your list as no demand? Because the volume is dropping off appreciably, and I'm getting shortening of the thrust in the price action. So Vasily, look at the way we look at this from the last high, or the close. You can do it from the close too. That's another good way to do it. But let's just do it from the last high. We make this kind of distance. And then on this high, we make that kind of distance. And as I say, you can do it from the closes. If you did it from the closes, it's the same thing. From here to here, and then to here. You can see the distance is shortening. There's only 2 things that do that. One is supply comes into the market and forces the market to not go up. And the second is that there's just not demand available. And I look down to the volume and I see that it's bar number 2, not bar number 1. And I see that the volume has dropped off quite a bit from bar number 1. So that tells me that buyers are getting tired up there. That's why I said no demand. Okay. Well, I can't, if I were out at sea. Let's not do the hypotheticals. I've got a whole bunch of stuff to show you here. How do you manage in real time not to get entangled with the history of the bars are showing in the previous preparation? Oh, that's a long question. It involves a lot of psychology. Are pauses in price action significant? They can be, sure, but I would prefer to answer questions related to the chart and what we're discussing. Hypotheticals on some imaginaries, whatever's going on in your mind is probably not the same thing. I'm not going to be imagining what you're imagining. So those are kind of, that doesn't have a lot of fruit for you on those kinds of questions. So please keep them kind of relevant to what we're talking about. And I'm happy to address, I'll stay here all night and address those questions, but I can't, hypotheticals are a little bit challenging for me. Okay, let's take a look at crude oil on Wednesday. This was a nice market. We had a good sell-off. So I'll show you a little even more in-depth Wyckoff here. One of the things that we do is the night before, I like to have a good handle on what's been going on the higher time frames, right? So I'm looking at crude oil here from whatever it was, Tuesday night, and I see, you know, clustered closes in here. We're coming to, I see some supply moves us down to here, right? On high volume, bit climactic. So we rally up, we come back up into resistance, and supply comes in again. Look at that widespread bar taking out those taking out those bars and taking and increasing volume. And so we come down and volume drops down, no question. But we're trying to rally up on each of these bars. And look at what happens. On these three bars here, the closes are all the same. So we dip down, we rally up, but it stops. We dip down, we rally up, and it stops. Here we go up. Well, we dip down probably first, then go up, and then we come back down again. So this last bar is no demand. I see clustered closes in here. This is still very weak market, is what I'm anticipating for the next day. So I want to know what yesterday's low is. I see this, let's erase this so you can see. I see this as an obvious level that every trader would, you know, worth their salt would see as a potential support. And obviously this is also a key level, the multi-day low. So I'm interested in yesterday's low, the 2-day low, and the multi-day low. Let's find out why. And I'll put those on my intraday chart. So here's a 5-minute chart of crude oil. Here's yesterday's low up here. Here's the 2-day low, and here's the multi-day low. So this is just this. This goes to here. And this is here, okay? Pretty straightforward. No magical numbers here, no Fibonacci quarterly bumps off or floor traders pivots or any other kind of mystical magical things. What really exists in the charts, right? Okay, so let's see what happens here. First thing I notice, we were trading underneath, we didn't even get to yesterday's low. We dropped down below the 2-day low in the overnight. Right, so we're already weak in the market, and we saw the weakness from before. And we come up in the pre-market, early in the pre-market, we bump our heads up against the 2-day low. Some decent volume comes in there, and then we drift down. We try it again. Right now we're at 9 o'clock Eastern time, so there's an active market here. We see good volume. Try to push the market up. In fact, we even get an increase in, whoops, sorry about that, an increase in the Weiss wave volume. So it looks bullish. I'm expecting this thing to push up, probably go into yesterday's low is what I was thinking of at the time. Doesn't do anything. And it falls back again. We come up again. We try to rally up at C, and I got two bars 1 and 2 here. Look at what happens. We have no demand on bar 1, and then bar 2, we get supply come in. And then it does it again, a third time up. And again, at D now we're looking at, and at D I see, again, no demand, really not expanding volume on a what looks like an interesting bullish bar because we're closing firm. I don't see any expansion of volume, and then bang, increase in volume to the downside, next bar. Weiss wave isn't showing me any real strength of demand coming in, so there's a short right there on the close of that bar. You can try to feather in here if you wanted to as well. And so we come down to E here, and I notice the Weiss wave volume is increasing nicely. So I'm content in my I'm feeling pretty good in my trade. But of course, The market wants to do what the market wants to do. This was very uncomfortable with a strong volume in here. My stop was right above this level here, I think. And that made me feel uncomfortable because I was coming in slightly underwater in this at this point. Next bar though, look at what happens. It comes down. So as this, we wouldn't know it at the time. We wouldn't know it as this bar closes, but excuse me, but by bar 3, we do know that this is now supply is taken over. This a lot of volume effort, but there was little result, not a great result. Okay, that's the price action. So the volume was strong to go up, but we didn't get any result. And we certainly know that because now we're closing underneath that bar. If that was buying, if that was predominantly buying, we'd never close under that bar, never. Next bar, bar 4, no demand, short that thing, right? That's a good short right there. Now, we're kind of hovering around this. I don't see that as really strength in terms of support. This might be a little bit stronger, but we have but this, the 2-day low and the failure to go to yesterday's low trumps local support, intraday support, right? And especially when we see all this supply in right there. So we would just short that, be aware that there's support here a little bit lower, but we have some room to maneuver. Market goes down. Look at my Weiss wave now. Oh my goodness. Oh my goodness. We've got supply in spades in this market and we're short and we have a couple of spots here. Now we get this bar. This looks like it wants to try to rally and it closes there in the middle. Back underneath the resistance. Remember, old support turns into resistance, right? Now, as we come up, again, we have no demand in here. Look at the volume, not much on the Weiss wave. Yeah, it picks up a little bit, but it's not even halfway as much as what we saw in supply coming down. Look at these narrow ranges. The spreads are so small here, right? There's no, and we can and just draw a line through and hit most of these price bars. That's just a little bit of congestion. There's no strength in this market. That's another opportunity for you to go short. Once we can see that we have we've got good supply in the background, then we're looking for opportunities to lean against resistance if we can and go short. As we break this level, now we can, as we break this G level on this bar here, 7, some strength comes into the downside. Now we can draw a trend channel in. You know, off of the trend channel, you got opportunities here, but I like to wait until the horizontal support has been broken. You can see where we're holding this level in here. Then it breaks at H. It does so on an increase in volume. By that point, somewhere around in here, the Weiss wave is picking up again. What do we get? Another no demand in here and another opportunity to short. Then we take it all the way down and look at where we exit out. We cover at the multi-day low on a very nice trend to the downside. That was quite readable and quite safe to trade. You would take your short here, your stop is up above resistance. You short here, your stop is up above just above resistance each time. And you would be moving your stop down. As this breaks, you can move it down a little bit. I'd want it to break. Once it breaks here, you can move this stop to here. So now you got profit on this one, still a little bit of risk here. As this comes down, I'd be moving both down into this area. And then as this occurs and as soon as this move occurs here, move it all down so that you keep the risk is only on the last entry there. How do you pick which trade on your typical day between crude and S&P? I look at both at night, and whatever I think has got